They say if you want to become a billionaire, you should do what billionaires do. So 30 days ago, I did exactly that. I stopped looking at side hustles and small time flips. I decided to follow the ironclad investing philosophy of Africa's richest man, Aliko Dangote. I followed his rules of patient capital, heavy industrial focus, and extreme long-term thinking. I even prepared my portfolio for the massive 2026 refinery IPO that everyone is talking about. I thought I was being disciplined. I thought I was finally playing the big boy game. But here's the truth, no one tells you. For a retail investor like me and you, it was a massive mistake. In just 4 weeks, I watched inflation eat my patient capital alive while I waited for moves that only work when you have billions in the bank and government concessions in your pocket. Today, I'm opening my portfolio to show you exactly where my money went, why the billionaire blueprint is a trap for small accounts in this 2026 economy, and the one secret rule I actually should have copied if I wanted to survive. Before we get into why I failed, we have to understand the logic. I did not just pick the shoes out of thin air. I looked at the foundation of the Dangote Group. Its philosophy is built on three pillars that sound perfect on paper. Pillar one, the 30-year rule. Aliko Dangote famously said, "It took me 30 years to get to where I am today. Youth of today want to achieve it overnight. It's not going to work." This idea is about patient capital. It's the idea that you don't look at your portfolio every day. You plant a seed and wait decades. Pillar 2, manufacture, don't just trade. He believes that trading, buying and selling is temporary, but manufacturing, that's where you create value and legacy. Whether it's cement, sugar, salt, or this $20 billion refinery, he owns the factory, not just the shop. Pillar 3, invest at home. He's a massive advocate for keeping capital in Nigeria, arguing that if we don't invest here, why should foreigners? Inspired by this, I shifted my strategy. I stopped chasing meme coins and tech flips. I moved my funds into heavy industrial stocks and started stacking Naira specifically for the IPO. Let's stop the grammar and talk real. Why did this fail? I failed because I forgot one thing. I am not Aliko Dangote. My waiting was killing me. Billionaires have what we call long-term money. If Dangote puts money into a project, he can afford not to touch it for 10 or 20 years. He has other businesses paying for his light bill, his food and his staff. But me, and probably you, our invested money is often just our future money. Once I was acting like a big girl, leaving my money to grow in heavy and industrial stocks. The Nigerian economy was moving faster than me. In general, says if your money is just sitting there waiting and not going faster than the price of petrol or a bag of rice, you're actually losing your money. Mistake number two, I was playing a game where the rules are different for the rich. We see Dangote's success and we think, okay, I'll just do what he does, but we forget that the red carpet is rolled out for him. When he wants to bring in machines, he gets special FX rate. When he builds the factory, the government gives him a tax break for a year. Me, if I want to buy dollars to hedge my rate, I pay the black market rate. If I make a little profit, the bank and the taxman are already waiting to take their cut. I was trying to follow the billionaire blueprint using common man tools. It's like trying to win a Formula One race while driving a keke napep. The strategy is good, but the vehicle is different. Number three, I was asset rich but pocket poor. By putting all my money into this big, slow moving investment to prepare, I became stuck. I had investment on my phone, but I did not have cash in my hand. When a better opportunity came up, maybe a quick trade or a chance to buy a property at a discount, I couldn't move. My money was locked up in a billionaire's timeline. In Nigeria, things change fast. If your money is not liquid, meaning you can get in out in 24 hours, you're in a dangerous position. I learned the hard way that for us retail investors, flexibility is more important than being a giant. Now let's talk about the elephant in the room, the July 2026 IPO. This is what everyone has been waiting for. The news is everywhere. Aliko Dangote is finally letting the public own a piece of the world's largest single train refinery, and the biggest Jara bonus, he's promising dividends in US dollars. In a country where the Naira is dancing Zanko against the dollar, that sounds like a dream, right? Every WhatsApp group and influencer is telling you to sell your village land and dump it all them. But before you rush, let's look at the danger zone. Analysts are valuing this refinery at over $60 billion. That is a massive number. When a company is this famous, everybody wants in. And when everyone wants in, the price goes up before the small guy even gets a chance to buy. If you buy into this IPO just because of the Dangote name, you might be buying at the very peak. Listen to me closely. A great company is not always a great investment if the price is too high. If you buy a bag of rice for 100k and the market price is 70k, it does not matter how high quality the rice, you've already lost money. During my 30-day experiment, I realized that I was so focused on owning a piece of history that I stopped looking at the math. I was looking at the refinery through a lens of national pride instead of profit and loss. In this economy, pride does not pay school fees. If the IPO price is based on future perfection and anything goes wrong, a drop in oil prices or technical delay, the stock price will crash. So if you're not supposed to just blindly follow the Dangote way, what are we supposed to do? Do we just leave our money in a savings account and watch it disappear? Absolutely not. The lessons I learned in those 30 days wasn't that Dangote is wrong. It was that I was trying to build the roof before I laid the foundation. Yes, the three things I do to fix my portfolio. And you should consider doing that too. First of all, prioritize cash flow over empire building. A billionaire can wait years for a profit. You and I need our money to work for us now. I moved a portion of my funds back into high yield instrument and short-term trade that pay out monthly or quarterly. In a high inflation economy, cash flow is your oxygen. If your money is locked in a 10-year industrial dream, you will suffocate before that dream comes true. Second, use the billionaire logic on a retail scale. Dangote loves monopolies and essentials sugar, salt, cement. I started looking for companies that provide essentials but are already listed and paying consistent dividends. You'll see it in the video before now. You don't have to wait for an IPO to own a piece of the Nigerian essentials market. Thirdly, the real dollar urge. Don't wait for promised dollar dividends from one company. I started diversifying into global ETFs. This gives you exposure to hundreds of companies like Apple, Amazon, or Tesla in actual US dollars. That way, if the Nigerian market has a bad day, your global portfolio keeps you afloat. The goal is not to be like Aliko Dangote today. The goal is to build enough wealth so that one day his strategy actually makes sense for your bank balance. I spent 30 days trying to be a billionaire and it almost nuked my progress. But that mistake taught me more about the Nigerian economy than any textbook ever could. Billionaires play a different game because they have a different safety net. Our job as retail investors is not to copy their moves, it's to copy their discipline while using tools that fit our reality. If you want my specific watchlist for the 2023 Refinery IPO, including the price I'm waiting for before I even think about buying, comment IPO below. I've done the math so you don't have to. Do not forget to like this video if you're tired of face level finance advice and want the truth. Subscribe and let's go together.